Hello friends, in this video I will demonstrate you one powerful trend tool to filter trends that you can use in your trading. You perhaps know about many trend indicators in MetaTrader. There is a Chimaku, there is a MACD, there are moving averages, various types, super trend perhaps, lots of trend tools, but in my opinion many of them are pretty much useless. Indicators in general are very much, most of them are useless, especially oscillators. I never really use them or never found real value in them. I tried almost everything. The only indicator that I keep using in my trading are moving averages. And as you know, moving average tells you the average price for a certain period of time. But we don't use any moving average, any average, you see. We use averages of certain period. Let's say the average for the week, average price for the week, average price for the month, average price for the year, average price for the day. Because like 20 period moving average is just 20 period moving average of what if you apply on 1 minute chart. If of 20 minutes, what is 20 minutes? It's not significant, doesn't mean anything. It's not logical to use just any average price. Any average price doesn't make sense. So we use of the year, month, week. And how do we do that? We apply, here we use double exponential moving average. The black line is of the yearly, of the highs, of the lows, and of the mean yearly average price. And this is applied to 4-hour chart. And in a 4-hour chart, the yearly would be 1,440 double exponential moving average, which corresponds to 240 trading days. Because during the year you have 240 trading days, and this corresponds to 1,440 double exponential moving average applied to 4-hour chart. It's the same. In the months you have 22 trading days, and this corresponds to 230 double exponential moving average on 4-hour charts. 130. Which is here the blue lines of the highs and of the low of the mean price. Then we also use weekly, which is corresponds to the 30 double exponential moving average of the 4-hour charts. You have this is 120 trading hours, 30 on 4-hour chart. So we have here the red is weekly, blue is monthly, and the orange is half-yearly, 6 months price, average price. Why I use double exponential moving average? Because it's more precise. It doesn't lack price as much as exponential moving average or simple. Most moving averages lack price, and they are not as accurate as double exponential moving average, which was invented by trader called Malley, or I don't remember his name. Doesn't matter how he was called, but he invented this. And the calculations, I won't go into this, but trust me, this is very accurate moving average. And see how price respects the yearly average price. Exactly, it tested the mean and didn't even close above the mean, and it pulled it back. And very safe to trade off those averages. Here you see how much it respects 30 double exponential moving average, which is the weekly. You see it's didn't even close. You see how nicely it was pushing off it. Here it was going along the blue, which is 130, which is monthly. You see, we'll go back and past, and you will see here you see how nicely it touched the yearly and bounced it off the yearly average price of the highs, yearly highs. Why I use highs, lows, and the mean? Because it's more accurate. You have basically moving average channel of the highs, of the lows, and of the mean. That's what was Jack Bernstein teaching. Moving average of the highs and of the lows is more accurate. He was using 8 exponential for that and daily, but here we went a bit further and we invented the system of yearly price, average price, monthly average price, and weekly average price applied to 4-hour chart using multi-time frame double exponential moving average. Here was COVID. Everybody knows this pattern, how price developed during COVID. This on EURUSD. So here you see how price was trending down below all the averages, especially along the weekly. Here it's broke above the weekly. You see how immediately it changed the trend. The price movement even took different shape. And when it closed above the monthly, it even started going further. Then it's broke here through yearly and half yearly, which were at the same place. See, retested and move it along the weekly up. Then it closed it below the weekly. Again, went back to the yearly, closed it below the yearly. See all the reactions at a monthly or yearly average price. And then it again broke above the weekly. Again, second attempt to break out above the yearly. Third, fourth attempt, and the fifth attempt was successful. It bounced off the yearly and half yearly and monthly, all matched together here in one spot. You see all 3 averages, and then it continued very rapidly up off the yearly. I learned this concept of using monthly, weekly, and average prices from Forexia. You can go. There's one guy in Forexia who teaches this. Also, other people who are teaching this. It makes sense because here you have indeed average price of the month, indeed average price of the year, and indeed of the week, and very accurate average price because double exponential moving average does not lack as much as exponential or simple or linear weighted or all other types. A very few accurate moving averages which will tell you the average price. Double exponential is surely one of the best. In my opinion, it's one of the best trend tools to be used to follow the trend. And I also saw that expert advisors based it on double exponential moving average are pretty successful. Just try, see, even on MT4 market type DEMA EA, you will see the results there. This is one EA, which is pretty good. And you can also use double exponential moving average envelopes. It's very hard to find this indicator, at least I didn't have success. Or simply I can put the link to indicator which can plot for you double exponential moving average price from different time frames, from 4 hours, 1 hour, and so on. And I can tell you also the numbers which you can use for 1 hour, 4 hours, 30 minutes to get the average price of the week, month, year, and so on. See how nicely it followed. Here it touched the highs of the half-year highs. This line, brown line, is average of 6 months highs. The middle is the mean average of half year and of the lows. You see, it broke through, retested the weekly here and crashed below. So you can see the trends pretty nicely follow the trend with this indicator, trend indicator called double exponential moving average. Here you see one touch of a monthly, second touch of the monthly, third touch of the monthly, crash to the yearly, was unable to hold, crash it below and continued above. Second retest on the third time it crashed. Usually if it touches once, twice, third fourth time crashes when it comes to moving averages. Here you see a nice retest, crash below. But then for targets you can use Camarilla pivot points, not Fibonacci. Here we have monthly Camarilla, monthly open range. We see price went to where? To the reversal level, the pink line, which is the reversal level R3 Camarilla high 3. They call it H3 or R3, whatever. The number level 3. So reverse at the reversal level, went back to the close, the opening range. You see, here I was expecting it to reach this the other side, the reversal level. It didn't. It almost reached, like, missed it by 4 pips and went up. Now we are where I went again. We are at the reversal level again at the pink. You see, and we also broke above the yearly price. So this is quite significant, and I believe we will continue higher. It looks pretty obvious. We will move higher, and where we will go? We did Tom DeMark projection from this breakout point, and we expect to go to 103 here somewhere. But now the new month will start on Tuesday, and we will have the new Camarilla levels, and pretty sure we will close somewhere in this area, maybe here. So it looks like the close, next month's close, will be in this area. So H3 will be exactly at Tom DeMark projection, somewhere in this area. Looks like it. On Tuesday we will see new levels for Camarilla months for the new week, which will be exciting for new targets. But here below, you know, the indicator, it's my FX book Outlook indicator that I use, and you know how to use it. As long as most of traders are long, when you go short, we look for short positions, and the blue lines, it means most of traders are long, and the red line, most of traders are short. So when blue is above the red, means go short, look for shorts. Here it was pretty obvious because price was below the monthly, below the weekly, yearly, and most of traders were long, so you short. We do the contrarian approach to my FX book Outlook positioning of traders, because 90% of them are wrong and price moves exactly the opposite. So that's how you can predict the price movement. Forex can be Forex is hard, but it is predictable. You see, it is predictable if you have the right tools. Not all indicators are useless. So that's how you can trade Forex, using Double Exponential Moving Average to filter the trends. Pretty good tool. You see rejection from the yearly once, twice. We close it. We didn't manage to close above. Obvious we will be rejecting. But there was the second retest. I would probably short here, but they went once again and crash it. Where it crashed to half yearly. You see, and exactly rejected from half yearly. That touched it, then touches the monthly. Was not able to break the above monthly average. Touch it, went below the yearly. Most of traders saw long, went long here rapidly. Strange how people react. We see price went below the half yearly, below the monthly, and traders start to go long. Strange. And then it crashed, of course, when most of the traders are long. You look for shorts. That's another indication. 70% is a good filter, but very often you have 50-50, and then when it's 50-50, and then price stays in between. Here was staying between half yearly and between the monthly, in between. You see, and most of traders were 50-50. It was like range thing. But still, even here you could trade off the weekly average down to the downside, because most of traders here still were long, so you would trade off those moves. This is 4 hours. You can go on 1 hour. It still has the same averages on 1 hour chart if you change the time frame. Here you see, because it's multi-time frame, it's very important to have static tools that stays the same across all time frames, like multi-time frame moving averages that you can apply to one chart, specific periods like year, a week, half a year, that stay across the same, static, that have some meaning behind them, not just 50 moving average of 15 minutes. What is 50 times 15 minutes? Doesn't make sense. Just use this. I will tell you exactly. I went here along. You see, I traded this rejection. I caught this move, 30 pips. I went here along of the yearly average price. Obviously, I expected the rejection. I also expected the retest. Here the price went up. When price was here, I knew it will come to retest this, and it did. I also was short in here towards the average, yearly average. So we went to retest, and now it's pushing up. I went here this move. Now I went again second long. Here I entered here. I expected it to continue. I went second to retest. It will go higher because we have broken the trend. Anyway. Now you know how to use double exponential moving average, which is very accurate, along with Camarilla levels. See my other videos on Camarilla levels. I will make more videos on Camarilla levels. And I always use this indicator, my FX book outlook, which tells the positioning of traders. See, it's 53 now, 50 almost, but most are short. 53 are short. So there is a bullish bias here. You see, still bullish bias when most of traders are short. Price goes up. That's it. I wish you all the best in your trading, success in your trading. Forex can be predictable, though for some it seems very hard, but it can be very precisely predictable. Let's put it so. You see how price nicely bounces off those average prices of the week, months, and of the year through history. You'll see, I just show you nice bounces, nice reaction points, nice downtrend off the weekly. The red is weekly. Apply it for your 4-hour chart. That's it. All the best.